Good afternoon, party people. So I'm hopping on because I was excited to see that while we did reach the morning objective that I spoke about, that we were trying to take longs to up to this morning, which was that 20 to 30% retracement on the weekly candle, this afternoon session is kind of looking bearish, and it looks like we might not get that on the week. Like I said, it's not definite, but this daily candle seemed like it might have wanted to turn red or black in this case. We had these equal lows down here, so those seemed like they kind of wanted to be targeted. We had those equal lows, and then we still had this opening range gap. We only filled about half of it. So I wanted to see, or I'm going to look for, if the market wants to fill in the rest of this opening range gap to the downside. Now this could very much well be the bottom of the day, and then we retrace back up into this 20% mark. But we're going to see. I mean, we have a silver bullet session left, so I am curious to see if we are either going to run up here or are we going to run the sell side. I think so. What you can see happen if we go to the 4 hour on NQ, it looks kind of nice. So we opened today and we came up and we just tapped in that 4 hour fair value gap. If you go to ES, what happened was we respected this order block, which is an hourly order block, pretty well. So on ES, we respected this hourly order block. On NASDAQ, we respected this 4 hour and 1 hour fair value gap to the downside. As you can see, I kept this order block mean threshold on here because we came up, we treated it there, came down above it, came back down to it. So that's nice. But what I'm really trying to see is, do we want to fill in the bottom part of this opening range, or do we want to retrace back up? So I like it. I came back on because we do have some targets that we can target in our 2 p.m. session. So let's see what we have. We have not a breaker, fair value gap. So what we're trying to do is we're going to see, do we want to target the bottom end of this opening range, or do we want to target this 20% line on the weekly? I think right now you could call either scenario pretty evenly. So that does mean our conditions are a little low probability. Like I mapped out, I think if you look at the 15-minute structure and then you look at the 5-minute structure, you could either make the argument for the bullish case up to this red line, this 20%. You could say this will be our low for the day, respected half midpoint of the opening range gap. We went up, came back down, and we're just going to end the day in this 20% line. Or you can make the argument for the bear case. We came back down 50%, came up, filled in these fair value gaps on the higher time frame, and got in at a premium to then take it lower and fill in the bottom half of this opening range gap. So, since we can argue both sides, we need to be careful. We're aiming on figuring out where the real draw liquidity is. So what we're doing is we're scalping some intraday price action. That was this morning. I'm going to take that off. So we did just take that low on the 5-minute. So something I've been paying attention to that ICT has been saying, ICT, his son's model is like when you take a 5 or 15-minute piece of liquidity, so we got a 5 and a 15-minute, you can then target a higher time frame, either 15-minute equal highs, but we also got equal lows down here. So we just took that 5-minute. We could get a quick scalp possibly to the upside. But we also took 2 losses this morning. So technically there's only one. I only get 1 trade left in today. Don't want to overtrade. So if we get 1 trade, let's try and find one that makes it count. Let's make it count. Might not take any trade. I'm eyeing on the 5-minute this fair value gap. Well, let's see. So our candle bodies are respecting the consequent encroachment of this SIBI fair value gap. I think let's get some good confirmation that we're actually going lower. Because if we are going lower, we could go a decent amount lower. But we also don't want to try and get caught up in, the sentiment of like retail logic of a bear flag. We got a bear flag forming and have them try and manipulate it to get us thinking it's going short. If you look at the 15-minute chart, so when you're trying to sell, you can sell from premium to discount. So if this black line was our equal lows that we're targeting, and this was the start of the price run, you could enter at 50% or higher to target these lows. And it's kind of hard because you could also make the opposite argument. That if this was the start of our price run and we're trying to land and target this 20% line, that right now we're close to the 50% on the opposing end. So since we can argue both ways, we are going to be a little patient. Better to do nothing and miss a move than be on the wrong side of a trade. This 5 minute is looking like it's rolling over. Another thing that can happen Friday at the end of the week, we could just go sideways. I got caught up in some of that on Monday trading. Was trying to catch the afternoon silver bullet, and it ended up just barcoding. Okay, if we continue to get heavy below this low, I'd be pretty confident about this sell side. But what I actually wanted to see was another candle to print right after this one that looked like that one, not one that looked like that. Go over to ES. Catch any SMT divergences on ES. Okay, so as you can see right here, this is a lower low on NASDAQ. That wasn't a lower low on ES, so that's an SMT divergence. Definitely a little bit of a red flag, so we'll watch it. It could lend us to some narrative towards the upside, but if this starts to come down lower, then I would consider it more of a discorrelation. We have the dollar making higher highs, so that's good for downside narrative. The 1 hour looks pretty bearish, but I think, what can easily happen, like I said, we could easily just barcode for the rest of today. And it looks bearish, but it doesn't have to do that today. It could save that until Monday. We just barcode sideways for the rest of the day. But if it does, we will try and be there. So if we were looking for upside, I would like it to be off of this fair value gap. So it would come up, close above it, come down, go higher, and catch that up until this 20% off the weekly. Again, this red line is 20% retracement from the bottom of our weekly low. So that would be the ICT. Thank God it's Friday model. It doesn't have to happen. We could just drop today. We could go sideways. So we'll have to wait and see. Dollar is rising. It's good for downside narrative. The highs on the dollar. So if the dollar took that high, that'd be some good price action, because that was the high. Is that the high of the morning session? It is. It's a significant dollar high. I'm framing. I like this bullish narrative just because we have the SMT divergence with ES. So if we did start to take out these swing highs, that would showcase that this lower low on NASDAQ was to take stops. Dollar still inching its way higher. Gonna redraw out the levels for this opening range gap. This was this morning's opening range gap. So you can see this morning we respected 50% of it very nicely with the candle bodies. Okay, so we're making a lower low. Didn't make the lower low on ES though. We also now have the 1, 2, 3 lower lows, 3 drives pattern, meaning if we did come up with some force and take these swing highs, I would feel even more confident going long. But we're not gonna get too hooked on that until it happens. Again, we also have a good size opening range gap here. So if we do want to wait for some, more definitive price swings before trying to go short, we have a decent amount of range for our target. So say we start breaking lower, we don't have to get too impatient and angsty, because we'll still be a distance from our target. Like, I'd want to see ES make a lower low. Before anything else. Go to the dollar is still rising. Dollar's still rising. Okay, ES is now making its lower low. I'm going to take this off the chart. There we go. On the 15-minute, we have this high-low, higher-high structure. So getting below this level would be, you could call that a breaker. It's also yellow. I made sure to have a black line over it in cases where it overlaps the opening range gap. Okay, so we're breaking lower. I like that. Taking the sell side liquidity right now. Let's see how this candle closes. Coming up. I would like that. For an entry. And what I'd want to see is us wick into it and then reject it and have no candle body close either in that body or that breaker body. We also have this red line, which is the 50% of the, we have 50% of the opening range. So a stop above there. See if I can shift these levels over. So our target is filling in the rest of this opening range gap with this black line being these equal lows. We have our stop above the third candle on this fair value gap, which is also above the 50% of the opening range, which is also looks like we might form a 5-minute fair value gap. And depending on where this candle, so to form this 5-minute fair value gap, 50% will be determined by where this third candle prints. So we're bumping up the bottom of that breaker. And it looks like we came right to the tick of our entry. It didn't cross over, so we didn't get triggered. That's technically, though, in ICT's concepts, an entry still. We're going to wait, not get too greedy. And you know what? If it runs without us, it runs without us. But that's technically an entry into this fair value gap based off of theory, based off of real trading conditions. That's not enough to trigger you in. But what I'm thinking is if that 1-minute candle is the high of this 5-minute candle, that means it will want to come back up in here if it decides to enter on this 5-minute fair value gap. That might not happen. It might just drop. We'll see. If we do get to the bottom of this opening range gap, we might have to reconsider that trade idea. is a little bit of a bummer because technically we entered. You could have put your entry in at the bottom of that order block. I mean the breaker block. You can see on the 15-minute it came up and bumped that. So that might have been a more appropriate stop. We were trying to trade a silver bullet. So that's why I set it right at the fair value gap line. It will be a little annoying if, like, in theory, we got the trade right, but in practice, it didn't execute, especially coming off of a loss this morning. That'll be annoying. Dollar is breaking that significant high, so it's getting a higher high on the dollar. You know, I would possibly enter one here. I'm going to wait on that, targeting this low. These equal lows are our target, our final target. We'll see. After taking a loss this morning, I'll hold off on entering here just to be a little more defensive. You could still see us open with a new 5-minute candle and have it run up here and then run down hard. I just like where this is. But if you were to enter on technically the tap of this breaker, that was also a viable entry. So having the limit order be right at the bottom of this breaker blocks was also an entry. And again, it could respect that and then come down and see the bottom. We're okay with that. We also have the consequent encroachment of a daily wick, which we visited yesterday, but it's still good to have on your charts because it is still a viable level. Okay, so we got that new 5-minute candle forming right here. Let's see if it wants to come up and address this. I'm gonna take this off. Okay, dollar is looking strong, looking like strong dollar. Okay, let's see how we treat this. Oh, we just came back to the breaker. I'm gonna be stubborn. I'm gonna wait for this silver bullet. And again, I really want to see So if we get a candle body close, if we were to close a body above this silver bullet, I'd probably collapse the trade just because, we're down below some sell side and it would just be looking for a real deep retracement. Looking at ES. ES is wicking into that fair value gap right here. Okay, so we're in. Let's see how it behaves. I'm going to move my stop just to the top of this candle. Just coming off of 2 losses this morning. Be a little more safe with the drawdown. What you could do too is something that I might do depending on how the account equity starts turning out. You could just go in with one contract, and then if you were to go in with one contract, you could open your stop and you could open yourself up to a little more risk because one contract here will probably be less drawdown than 2 contracts here. But I like how we have this breaker structure. Coinciding with this fair value gap. It's also, so again, on the 5-minute, it seems like we're addressing this 5-minute fair value gap. So if we measure out 50% of that 5-minute fair value gap, the consequent encroachment of this 5-minute fair value gap is right here. With our stop slightly above it, I mean, it could wick above that and then close. Let's see. Okay. I want to see where we close. If we leave this silver bullet fair value gap to the downside, okay, it doesn't look like we're going to do that. No worries. You could probably get, I would wait for this swing low, this swing high to be taken before getting bullish, just because that's 50% of the breaker. It's also a swing high. Dollar's dropping. We are on a little bit of a losing streak here, but no worries. So these are all 1-minute fair value gaps inside of this 5-minute. If we were to come down and close, so you want to see, are we going to use this as support, or are we going to come down and close through it? If we come down and close below it, then you can see, look, on the 5 minute, we're respecting consequent encroachment with the candle's bodies. Came up to this last inefficiency within this 5 minute. On the 15 minute, it looks like a rebalancing, or an immediate rebalance up to that coming down. That all depends on how we use this fair value gap right here. Does it want to use it to send price higher, or is it going to close below it? If it closes below it, I think we'll definitely see some downside. Some more downside. Turn that to a regular fair value gap. So you can see the bodies of the candles respected this fair value gap. So we did get a close. We did get a close below it. Coming up. Let's see. Do we wanna treat that as an inversion? Just stop all that. Okay, we shouldn't be in this trade. That would be my 4th trade for the day, and technically my max is 3. Let's see how this up close candle supports price. I mean down close candle. Yeah. Damn. So it wants to go lower. Let's try and... Oops. Meant to buy back one there. Okay, let's just... do that. Scalped back a little bit of profit. Dollar making a new high. So just accidentally sold an additional one. I meant to click the buy. So bought back a little bit of profit. Let's see if this wants to just go down. If we can just let a runner go. If we are on sides. I like how this candle came right up to the bottom wick of that one. So treated it like an immediate rebalance. Also on the higher time frame, it's looking like for the 15-minute, that 15-minute candle could have been an immediate rebalance. On the 15, this up close candle, tapping the bottom of this. Okay, price is acting a fool. We almost got caught up in it. We did take a loss. Let's see what the account looks like. Yeah, so we had those two little scalps, scalp back some profits. That was the stop loss we just hit. That was those quick scalps to the downside that I shouldn't have taken. It was against the rules. But it came back to scalp back a little bit of profit from this morning's dealings, but still ended the day red. So I kind of spoke this morning about just red weeks. Today was a red week. We traded 2 times this week. This morning was a little rough because the trade delivered on NQ, but it didn't deliver on ES. Looking forward to next week. Next week we have GDP coming out on Wednesday. And I think Fed Powell speaks that same day. Nope, Thursday. So Thursday we have GDP. Fed speaks Thursday as well. This is just kind of barcoding. Got a little undisciplined here with the trading, but we're just going to stay out of it, especially because coming all the way up to here made sense. It was an inefficiency on the 1 minute, 5 minute, and it's allowable, to come all the way up here. Technically, our stops were a little lower just because we didn't want to take on that much risk, but it came up here and then rejected. And then when I saw it come back down through this blue fair value gap, I liked that. Then I saw this immediate rebalance. But then when it did that, so we came down, we disrespected this down close candle. So we didn't use this as support. Came down, immediately rebalanced, but then it didn't want to continue going lower. That's when I was like, we're probably just going to go sideways if we do. That's why I moved my stop to right there. I was a little bit above the breaker. It was above this down close candle. Seems like we're kind of respecting this fair value gap, but even when you're in like a seek and destroy sideways market, it'll respect certain PD arrays, but ultimately it will have no direction. Dollar's still going higher. Could see a drop from here, but we should not be in it. No more trading today. Okay, so I'm going to log off. Here's the equity ending this week. So we had a good first week. Then we had a down second week. I spoke in the last video this morning about how not terribly worried about this. I think it'll actually kind of be good for the channel, showing people that, we can go down. Like you go down, you have peaks and troughs, but kind of making sure that your winning days are what increases your equity balance, and just making sure your losing days aren't too much. So this was the first week, had a pretty good start. Second week, not too bad a start, but if we can pull it out of this, I would love that for the YouTube channel, just because I want this YouTube channel to kind of be more realistic. I don't want it to be one of those channels where somebody's just like winning every day, and then when that translates to somebody who's might be break even or is like still new at this, it's like there's so much in between, like getting to that point, and that's what I want this channel to really be about. So as long as we're not blowing ourselves up, I can see us pulling out of that, especially since the trades we've been taking have been this week was just a rough week because of FOMC. So respect to that fair value gap, it would have to come and take these lows. If it didn't come and take these lows right now, then we are completely in just like seek and destroy sideways barcode chop. Let's see what it does. And another thing, another way to identify just low probability, high resistance conditions is, even if we were off, it hasn't gone in any direction with like any intention really. So, I mean, it came up here, it came back down, but when it goes somewhere quickly, for example, this inefficiency, it does that for a reason. And if we were like really in, like ICT says, like it'll move like butter, like your liquidity runs. So what it would do is you'd want to see it come up to here, and then when it continues its direction, it should go straight for this low, but it didn't. It just came back down. Dollar's still going higher. It seems like now it's going to want to target these lows. Took that first one. I'd want to see it take the second one. If it just took this one and then kind of like pulled back up to around here, that would be really frustrating. That would just mean we're 100% in seek and destroy. Yeah, that's frustrating. Cool. I'm gonna head off. Hope you guys enjoy your weekend, and